Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video to begin the month of December here in 2022. We'll take a look at the market here, which is massively unchanged, except for the Dow. The Dow, which is 30 stocks, was down 0.5%, but the NASDAQ, flat as a pancake. So is the S&P. So of all the volatility in today's session, and all the movement after yesterday, the stock market, at least on the intraday chart, taking a look at this, closed right about where it opened. So no change in the stock market, but that doesn't mean we had no volatility. We certainly did. Let's pick up with the big picture, and then we'll go into Salesforce.com, because that was a big down stock in today's session because it had earnings, and we talked about its expected move, which is just about at that target. So let's start with the big picture and drill down from there. On the S&P, we're still up, and we'll go back to the SPX. We're still up into this realm of bear market rally. And we'll change that, of course, if we ever do get above and continue trading above the trend line and the moving average, the 200-day simple. That did not happen here, which is at the end of August into September. And we will see if it happens here at the end of 2022. We'll think about this as we did in similar points in the market, whereas the risk for trades is to the upside. So the risk of trades is to the upside versus the reward pathway in price takes us right back to new lows. I don't think those will happen in December, but they could happen in early January in 2023. So let's just get that logic as we frame out the big picture going through the month of December, where the reward, and the reward just means a larger distance toward the prior low of the market. So that's your reward pathway, and the reward pathway does take us back down there, and that could be, again, a couple of months. It took a couple of months here and in the other time to do that. Not going to be very different in this logic, at least. In the NASDAQ, that will be similar, although it shows weakness because the tech sector itself is and has been under pressure through the bulk of 2022. But the Dow mini futures, the 30 stocks that make up the Dow, not seeing a move back to lows. In fact, it shows a broader trading range. So as the S&P and the NASDAQ pulled down majorly by the technology sector and some of the leading tech names, the broad-based, or stocks that are not part of the technology sector, are showing more of a sideways range. If you think about the big arrow for 2022 for the Dow, even though it went down, was actually sideways. And the Russell a little bit similarly. So that's a little difference in the small caps in the tech sector, and of course the S&P and the 30 stocks in the Dow. While we're on the topic, crude oil had its bounce up away from about the 75 per barrel level, and that just keeps its support level we've discussed in any particular bull or rally reversal type plays intact. Speaking of a sideways trading range, gold. And we'll actually pull this all the way back to the weekly chart. That way we can see how important the support level of, it's roughly 1,700, a little bit under that, per ounce. The upper level is about 2,000, and the midpoint of gold is being achieved. Think about this like a distribution. Distribution would be a bell curve. So when the market is above or trades well above the mean being the middle, that can give you a sell short trade for the market to trade back in toward the middle, which is mean reversion. Other trades in 2022 have been a similar play long from roughly 1,700, and this one went a little lower, but has since rally reversed back into the midpoint. So that is a bigger picture in gold for trades. And the same will be true in GLD. You can see the levels here. If you do trade the options, and that could be done, of course, with GLD. And that would not be necessarily a futures contract, but it itself would have its sideways trading range. The levels would be different, roughly 160 and 185, midpoint being about 172, which is getting a bullish reversal. Not dissimilar in silver, although silver has seen weakness that gold has not. In other words, the silver contract, or SLV at least, we can look at that, has seen a little bit more down move as opposed to gold, which has seen a little more sideways move. The same can be seen in SI, which is there's a trading range for silver, although I have it marked out as a long-term trading range at about that 1850 and about 2850 per ounce. It has had a decline for the bulk of 2021 and 2022, sideways but still decline. And while we're here, again, the bond market, TLT, is getting a bigger bounce, bigger reversal against the broader downtrend. So a short-term play for TLT shows a strong rally, one that's similar to what we saw in July. Now we're seeing it take us through in November and now into December. And that will be true for other products in the bond market, including the ZN, which is the 10-year Treasury note, and the ZB. The ZB is the 30-year Treasury yield. While we're on that topic, on the flip side of the pricing of the bond market is the yield. So as we see a retrace up to 4, and this is 4.4%. When it says 44, that just means 4.4%. I have the labels marked off as 40, 30, and 20, just showing 4%, 3%, and down here to 2%. Just levels to keep our focus on. So the bond yield, 10-year Treasury yield, did push all the way from 2 to 3 and 3 to 4, but has now traded down from the 4% level. And the other thing that is paralleling this, or trading just like it, positive correlation, is the US dollar index, DXY, which it has seen the strongest pullback seen in 2022. So that is the biggest pullback in the dollar index all year. And that's taken us all the way through November. So that is a quick bird's eye view of big markets, big trends, dollar, bonds, stocks, and of course, the rates, yields as well. So that's what we're watching as we go through December, and the potential for a possible continuation of the rally against a repeat. And a repeat would be potentially we go just a little bit higher here, but may turn and reverse back to lows. And the most recent news has been about inflation data. Of course, what did send the market surging was a quick comment from Chair Powell, and all it was we've been raising our base interest rate, or at least the Fed funds rate, at a 75 basis point, or 0.75 per month. But in December, we're still going to raise it, but we might raise it at 50 or 50 basis points. And the crowd went wild. Nonetheless, that is a short-term play that is against the broader trend of inflationary data, which still does run high, and the potentially, and I think we're seeing more signs of it, decline in economic output, and of course the economy itself, none of which should have a bullish basis or bullish bend to equity prices. In tomorrow's session, we have the big one, or at least a big one. We've had inflation data, we've had Chair Powell talk, we've had Beige Book, we've had different things this week. But we will have the monthly jobs report, and that's considered here, or talked about here, as a labor force survey and the employment situation. So let's get inside of the employment situation going forward. So in tomorrow's session, Friday, we call it the jobs report. So we're looking for non-farm payrolls to be a little bit, we can see the expectations, labor force participation rate, etc. But in here, we may see a reduction. So the estimate I was seeing was about 200,000. That's an addition of 200,000 jobs, which is down a little bit from the previous. And if that does play out, that will be a reduction, or a little bit. There'll still be jobs added, but fewer jobs added in the workforce. And the unemployment rate is projected, or at least forecast, consensus estimates, to be about 3.7%. These are things we'll be watching, and any other data points that will take place pre-market, right in the first hour before the market opens on Friday. What does the equity market say about that? In the S&P, we have for tomorrow's session, 42 handle or 42-point expected move. In the SPX, we have about a 42 as well. And in the NASDAQ, the tech-centric index, roughly 171 basis point or 171 handles for the expected move. And the bulk of that could take place pre-market or the first hour, or maybe a little bit beyond that. So volatility will still be in play. It is the week after the holidays, so we're getting back into the swing of things. But volatility is here, headline news is here, and one more quick note. Salesforce.com, mentioned at the top of the video, did play down to the expected move level nearing 140 per share on their earnings that just was released in the prior session. So that is what we are watching as it weakened and is close to new lows. One quick note. Which stocks made new 52-week highs in today's session? Just a few we want to note with Eli Lilly, Merck, Bristol Myers Squibb, and the others ADP. And a quick glance at those. There are 29 stocks that did so, but just look at those from market cap. Quick note, which ones are up there? Eli Lilly, Merck, MRK, Bristol Myers Squibb, and ADP. Those are the leading stocks that made new highs. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 1st, 2022.